The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for the one and only Larry Pesavento. Larry's away, so let's go to the numbers here. And first of all, thank you, Tommy O'Brien Jr. That was a fabulous wrap-up, the 3-minute wrap-up at 9 o'clock Eastern Time. Usually my show is at 11 o'clock till noon. It's called the Tiger Technicians Hour, and my daily service is called the Opening Call. So it's a pleasure to be sitting in for Larry. There's a technique that I use for a very long time, developed it a couple of decades ago, where you identify the lowest low bar and you merely count each successively higher peak. At the fourth highest peak, I alphabetize them, uppercase on the way up, lowercase on the way down. When you get to the fourth highest peak, other things can happen. You can go to an E, F, and G, but D is where things can happen. I'll show you what I mean. Here in the 2-minute chart, went to a peak D at about 3:50 this morning Eastern Time, about 4 o'clock. And that D was a double top, could not break above it. That was in the E-mini at 2413.75. And subsequently, by 8 o'clock, 4 hours later, it dropped not that much, but it went down to 2407.75. Now there's a rally that's gone in place, a 2-minute rally to this green line, the 200-period exponential moving average, which is at this point strong resistance, and it went to an F, and now it's stalling. I put the down arrow because the stochastic's turning down and MACD's turning down. These are techniques that I use, so we'll come back and watch it. Meantime, back at the ranch, the 10-minute chart right here is in a down channel, and it challenged the low of the trend line. All you do in channels is you identify particular highs and lower highs and lower lows, or higher highs and higher lows, and you try to draw a trend line that gets to at least 2 points of the extremes on the upside or the downside. And the 3 is better, but 2 is fine. And then you draw the trend line, and then you draw a parallel line with it. I have a different technique. I have a technique that uses that as a core, but then within that it has what I call an inside track support area or resistance area. And it went right to the support area this morning at about 8 o'clock at the 2407 area, 2407.75. It's rallied. It's close to the resistance area, and we'll see what happens. A break into 2414s, 2413 to 2414 would be quite impressive. My thinking here is, having gone through all 50 of the IBD, Investors Business Daily Top 50 NDX charts, the majority, when I say majority, I mean probably 35 to 40 of the 50 are in a topping area. It doesn't mean to say they have to have topped, but that's the topping area where I would expect a reversal. So this says to me that we are getting to a point of strain. But my contention is always that in bear phases, you have to have two really important ingredients. There are 3 or 4, but let's call them 2 important ones. One is that there has to be bad news. The market has to perceive whatever news it is as bad news and pull back sharply with the Dow down 80 to a triple digit down, and there has to be down 15 or more, and that would say, okay, now we've got a trend in place, and you have to see the S&P open and close double digits down, very ugly action, and all rallies failed. And at the end of the day, there's a slide to negative, and the next morning there's a negative opening, and then all rallies fail. That's number one. That has to be accompanied with a higher volatility index. If you look at the VIX index, VIX.X, if you look at the VIX index, what's happening is that it is down at lows, but we've seen over the past few weeks, but essentially the past 20 years, that the 9.50s, 9.30s has been an area where there's been a pretty good rally from that area. The last low that was made was on Friday, where the VIX went to 965. So 965 is right in the area. 956 was the previous low, where you had a very sharp move to the upside. And I'm suspecting that this is just a hint to say, be a little careful here. There's a really good chance that the VIX is about to wake up again and start a move to the upside. It's at 10.66. It's up 85 cents. Good chance it's going to get to the 1150s if this market weakens by day's end. All right, so we've got that out the way, but there still isn't really bad news. Now, the bad news, I think, at this particular point is going to be the perception that President Trump is not going to be able to full his pledge of lower taxes, not at this particular time, and the market is not going to take that very well. All the other stuff, if by now, after a year, one hasn't learned that what is said are spontaneous tweets and expressions of either frustration or glee that the president puts out, but you can't treat that as some kind of legislation. It's just, these are comments. These are comments that in the privacy of the White House, every single president has had, but they've been in the privacy of the White House. They haven't been live as tweets. And that's really, if you don't get that, you can analyze 24 hours a day and you're not going to get anywhere. You've got to understand it is action. It is not reaction or comments that are going to count. And therefore, I think the market is going to perceive that the president is going to be under a lot of duress and that action is not going to be able to be taken at this particular point. This is my thinking. I have no idea. And who can tell whether or not that's going to be accurate? But I'm basing it on the fact that I do believe, now let's do something else. We're going to go to the QQQ series. This is the Index 100 trading vehicle, made a high of 141.35 on the 25th, Thursday. Friday, it couldn't take it out. And today it's trading 141.17, just down 15 cents. But I think that what we're looking at here is that the chance that we could see a pullback is getting stronger and stronger, although the technicals, the stochastics at 92%, that's very strong. The MACD has had an M-shaped pattern, but the right shoulder is way lower than the other. The price is at all-time highs. I think that divergence is something that's going to be costly. I think that the market's going to pull back. And even if it only pulls back to 2 weeks ago, the low that was made at 135.87 back on the 18th of May, even that would be a pretty good digestive phase for the NQs. But I suspect that once it starts down, it's going to be lower lows and lower highs. A new high today or tomorrow says, mister, you're mistaken. This is the ever-ready bunny, and it's just going to keep going higher. No, I don't think that's the case. I do think, based on all the work that I'm doing. Now, look what's going on here. If you look at the ESM 17, the June contract of the E-mini, it made, I forget those Chapman Wave 5s right now, but what it is looking at the arch formation in the 120-minute chart. Let me expand that. Or let me just say, on the left here is the daily, in the middle is usually the weekly, on the right is the monthly. I've just expanded the 120-minute chart. I want you to see that Larry does not use these techniques as these techniques that I use. I love using them. I find they help in my particular technique, but Larry has a wonderful series of techniques using Gartleys and butterflies and Fibonacci numbers. I use something slightly different. So the stochastic is way down here. That's a very negative action, and the MACD is very strongly down. And yet the price has held pretty well, but I think that it's going to slide lower, and if it takes that 2406, watch out below. Basil Chapman sitting in for Larry Passamento. I'll be right back after these important messages. Futures are down.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, back again. This is Basil Chapman sitting for Larry Pesavento. Let me do a couple of other things I want to show you. Just move this away. So if you're looking at my charts, you're looking at left side down is the E-mini daily, middle is the E-mini weekly, and on the right is the monthly, and right in the corner here is the 120-minute chart. So let me show you the dollar DXY. This is the dollar right now. The dollar is up 3 cents at 97.48. Let me just put that in A. I just want to make sure 97.55.52. So we're in leg C in the dollar in the Chapman wave methodology. But it isn't a very big move at all, not yet anyway, but it has started a cup formation, and that's very important right there. And I'll show you as we go through the currencies what's important. The dollar needs to get to the 98, about 98.19. That's about 60 cents up from here, 70 cents, to be able to show that the weekly chart is trying to form some kind of a base of support. And that's going to be tough, because if 97, it's 97.48, if 97 is cracked, you get this arch formation, which means, uh-oh, you're going to retest the lows. But that says to me, all right, so then look at the gold, because about 5 weeks, 7 weeks, twice a year, over the period of a year, 12 months, you will get the gold and dollar contracts moving in the same direction, not the same percentages, but kind of in the same direction, moving up or moving down in unison. Most of the time, though, they're moving counterpoint. And if you look, the dollar just made a leg C, but it's just a tiny little move. Look how big the gold contract has gone. It's gone from the 12.19 area to where it's trading right now at 12.64. It's down $7 at 12.64, but what is really important is the stochastic is at 90%. That's good, and the MACD is good. But I suspect that we're looking at chop, chop, chop. This is what I've been discussing for about for a few weeks now, that there's a chance that the weekly chart is the one that's really important here, and it's suggesting 1279 is very strong resistance based on the 200-period exponential moving average. 1257 is key shorter-term support, but really 1253. So the parameters on the larger in the larger context for the weekly chart for gold are 1279, 1282 on the upside. Once it gets to 1282, that's very positive action. But it might be a little struggle up until then. The 120-minute chart is turned down. The monthly chart is okay, but it's still stuck in a trading band. So essentially, what I'm looking at, very much like the yields. Yields are stuck in a trading area, and gold is stuck in a trading area. And basically, the dollar is, if you look at the EUR USD, the euro-dollar currency pair, look at this. A peak E and then peak D did pull back with the MACD and stochastic, but then it spiraled to a new high. So this is going to be very important because the euro-dollar is actually looking quite strong. It looks like it wants to go to a leg D in the weekly chart, which would be above 1.126. That would suggest that if it goes above that level, this is that peak C from last week, it extends leg C, but it makes this candle right here, the week of the 11th of November of last year, 1.12989. That's going to be key resistance. However, a break in the euro-dollar at this particular point to the upside would not only be very positive, it would suggest that the dollar's going to pull back a little more, and that should help gold. So I'm looking at USD, JPY, these different currencies. This is the dollar, Japanese yen, and this has that pattern that I like to call the lowercase h. I'll draw it in right here. It looks like this, little cup, a little arch formation, and the left side is the H, the back of the H. Looks like a chair, and there's a little seat. And this is suggesting that if there is a move below, it's trading at 111.03 dollar Japanese yen currency pair. The weekly chart has got this arch formation. The 120-minute chart is attempting a bounce, but it looks like it's a lowercase m formation. Monthly chart, it says chop chop within 115 and 108 trading band. But right now, it looks like it wants to retest the low that was made at 110.23 back on the 18th of May if it takes out today's low, which so far is 110.76. It's really good action if it goes above 111.60. So this is going to be a very important session for a number of reasons. My contention is that it'll be a really important informational session, in that if the bonds, the bonds trading at 153 and 430 seconds, up a half a point, making a leg C, if bonds are going to move higher, quite a bit higher, I'll go to the TLT, because most people who are not looking at the futures really look at the ETFs that are functioning and give you great information. So if you look at the TLT trading at 124.01, up 0.53, if it goes above 123.54 on a print base, 123.94, sorry, on a print basis, that starts leg C. 123.95 is the 200-period exponential moving average resistance. A close today above that, as the market pulls back and the VIX rallies, gives me three of my little elves. It's Bondi, Vixie, Dolly, and Goldie. We're going to be watching this real closely. Why? Because if bonds rally as the market pulls back and the volatility index rallies as well, you've got the ingredients that says, aha, finally the QQQ series, we spoke about that just a moment ago, could start a pullback. The Dow INDU, this is the Dow cash position, can be in a failure mode and pull back under the 21,000 support. It's at 21,080 right now. And as soon as it takes out 20,960, the 9-period exponential moving average, all of a sudden you've got something very different, because the weekly chart continues the lowercase. This is a soft W formation, like two U's put together. It's a template pattern that I've put here. in the chart, of the weekly chart, for a long time, and it just says that the resistance in the 21,100s is so strong that we might just go chop, chop, chop sideways, going from the top of the rectangle, the yellow rectangle, towards the bottom, towards the 20,800 and 20,500 area over the period of end of May into June. We'll see if that's going to be a tough call, but that's the call I'm making. Let's see. A couple of things I want to look at here is that within the context of the IWM, which is the Russell 2000, trading at 137.06 right now, is struggling within this pattern with the resistance in the daily. The weekly chart says, no, it's going to be real tough to break out. More likely, it's going to try to test the 135s again. It's at 137.5. It's about 1.5 points down. That's what I'm looking at. And the monthly chart is really good action. All the monthly charts of all the indices are very strong. And that's why looking out, I'm very bullish. Shorter term, more and more heading towards sell modes, sell signals to sell modes, and short positions. So we're about to take another break. Basil Chapman sitting in for the one and only Larry Pesavento. Futures are down for S&P. That's the E-mini. The Dow futures are down 33. No big deal right now. Let's see what happens as the day progresses. We'll see what happens when we go to the 10 o'clock hour. It's going to be very important today. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All everyone, Basil Chapman sitting for Larry Pesavento. This is Trade What You See, but it's my pleasure to be sitting in, guest host. We're looking at the 2-minute chart. Remember, I put that down arrow at that peak F in the Chapman wave, stochastic pullback, MACD pullback. And now you're trying to rally that 2410, 50 area is going to be real strong, 200 period exponential moving average resistance. If you're looking at this is the 2-minute chart. If you're looking at the 10-minute chart, what we're looking at here is, whoops, wrong one, ESM17, there it is. That channel, a down channel. Remember, if you can identify channels and see a trading range within those channels, like little bumper cars, and every time it hits the border, it comes back into play, comes down to the lower end, hits that border, bounces. And my thinking here is that we're going to see a soft session. And one of the reasons is that the plethora of the Investors Business Daily top 50, let me just give you some names here. Top 50, you're looking at Mercado Libre, that's the 16, number 16. Actually, I did all those. So let me go back to this. And then I wrote down with each one, I wrote down what weekly is. The weekly of TEL, number 1, TEL Education is a G/C in the weekly. A Light, which is a fantastic looking stock, is in leg E. Viva Systems, VEV, F/C in the weekly chart. Lam Research, leg, can't even read it. Leg S? No, can't be. Well, let me see. LRCX. Let's just do this right now. Anyway, I went through all of these in daily, weekly, monthly, even 120-minute charts, and I can just tell you that my thinking here is that there's a problem. So Lam Research, just a fantastic company, up 36 cents at 155.48, but not all of them are doing this because, let me just see here. What we're looking at is that it's in leg D, and the weekly chart is leg E. And you can just go through these over and over. Look at this vertical move that's gone on in the monthly chart. And this monthly chart, do you realize that Lam Research, and I have to say that speaking to this friend of mine who's deeply involved in the semiconductor index, I can never rely on him to tell me whether or not the semiconductors are in buys or sells, because he gets information based on other factors. So sometimes he said that the orders are coming in, and then the stocks pull back. Sometimes the other way around. So I just treat it as information, and the information is that Lam Research is just one of the finest companies in terms of speculating on the outlook. The outlook is just terrific, and yet he says Applied Materials is a fantastic company, but they cannot always rely on the outlook. And look at this. Applied Materials just about to make a leg D in the daily chart at 45.74. It needs 45.75. It makes a leg D, or even now it could be a double top. Leg E, possibly going to a leg F, very quick F in the weekly chart. Look at this. And what I wanted to say is that if you look at the monthly charts, Lam Research hadn't had a down month. Everything was green, the green candles for 6, 7, 8 months. Applied Materials has had, since the low that was made back in August of 2015, it's had 1, 2, 3, 4, 5 red candles, and there were little excuses for a breather. There was just these tiny little, look at the big greens. So they're ready for some kind of a pullback, and I think we are very close. So now let me just give you some numbers. INDU, the Dow is down 44.75. This is a very important moment here in my work. We'll see what happens. We do have quite a lot of short positions from our opening call subscribers. We'll see what happens. Look at the S&P, SPX.X. S&P is down 5.40 at 2410.42. There's a chance that this is going to be a G if this pulls back sharper. If the Dow pulls back, I say to subscribers, a minus 80 cumulatively between now and tomorrow would be a negative. The S&P needs to break under 2402. That's 8 points to 8.5 points. It's going to take a lot to break down after all these positive days. But I do think that it will break 2402, the support in the 9-period moving average this week. If you look at the QQQ series, still a little bit of residual strength. It's up 3 cents at 141.26. My thinking here is that until the semiconductor index and the QQQ series break this trend of higher highs and higher lows and start to at least break their 9-period moving average support, in this case 139.82 in the power shares QQQ Trust series. We've got to see residual strength is still maintaining some kind of support. I think that's about to fade. That's my thinking. We'll see what happens. If you're looking at the TLT, right now it's only up, it's up 48 cents at 123.94. It did take out the previous high, so this is leg C. For us, that's important for subscribers. We're actually long the TLT. We've got a fairly tight stop. I think it's about a 7% stop. I'm sorry, less than a 1. That's about a 1.2 stop. And I think that this can be a plus, up arrow, because I believe that after this pullback is completed in the trough F, after a peak F at 124.98, this is more than a bounce because it's walking the 9-period exponential moving average. Stochastics at 83%, good but not great. Great is in the 90% area. And the MACD is good but not great because it's way under what it was before. But so far, I think it's good action. Let's see if this H pattern that goes to a lowercase m pattern in the schematic of the weekly chart of the TLT is going to hold. Because if there is a close, actually, it doesn't have to be a close. If there's a push above 124.98, the weekly high of April the 21st, that's going to be very good action. So let's just quickly go to the 2-minute chart and see how we're doing here. Whoa, look at that big expansion to the upside. Made a peak F top, broke above the 200-period exponential moving average. We'll watch this very closely here because that's saying that internal buying power just is holding like crazy here. Let's look at the VIX index, VIX.X, trading at 1062. It's still up 81 cents. And that is a strong hint, more than a hint. It is a suggestion that the 9-period moving average of 10.76 is becoming a little bit of a magnet. And that says watch the VIX very closely. Watch for bounces that fail. You don't want to see lower lows and lower highs if you're a bull, and you do want to see that intraday if you're a bear. So a couple of things we need to do. The S&P is only down 2 right now. That internal strength is really quite something. I want you to go to the, I want you to see where the dollar is right now. I'm a little bit behind. Dollar's up 3 cents at 97.47. All right, so that's good. Now I think it's really important to see, we've done crude oil. I knew there was one thing missing. Crude oil is, in fact, down 53 cents at 49.26. Made that peak D the other day. I say there's a good chance that I'm going to put a down arrow, and I am going to, no, I can't. I keep it as a plus sign just for now because the MACD has not crossed negative. That would be a good reason to go with a down arrow. So all that I'm looking at here is that crude oil is in this chop phase. I want to show you something quite important. Let me go to recent. I'll go to this one here, long term. I didn't show subscribers out of the, 18, 20 charts I showed over the weekend. I didn't do this because I discussed it. I wanted to see how we started this week. I'll probably send it out tonight for tomorrow for subscribers. And that is the 30-year, 10-year, and 5-year yields. We'll look at that in a brief moment as soon as we get back. Basil Chapman speaking for Larry Pesavento. Dow's down 29, S&P's down 2.5. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi everyone, we're back. Basil Chapman sitting in for Larry Pesavento. Dow is down 33. S&P is down 3.5. This is what I wanted to show you. The white, this is a black background. The white price movement is the 30-year TYX, the 30-year T-bond interest rate. The brown is the 10-year T-note rate, and the cyan light blue is the 5-year T-note rate. And within the context of all this, what we're looking at, lower lows and lower highs has been the format. There were 2 H patterns that had the chance to break out, couldn't do it. My contention here is that the economy isn't doing quite as well as what the Fed thinks it is, and that rates are just stuck in a range, making slightly lower lows and lower highs. But the real issue is that if you look at this, you see this gray line here? I can move it anywhere. Move it there, right where we are right now. We've been here so many times, so rates are really not an issue at all. Rates will become an issue if they start to skyrocket into the 3.2 area. 31.97, 3.197 was the high in December. And then it made a nominal new high. I should have put that in, 32.01, 32... Let me just double check here. I want to give you the exact number. 3202, yeah, 3202, no, 3201, March of 2007. So let me put that in so that I've got it apples to apples. 32.01, and that was 2017. So I don't know what week it was. I'll just keep it for now so that we've got the right thing. Okay, so what we're looking at is that there's a little double top, is a double top failure pattern, and that the 30-year came back down, took out its previous low, and now it's trying to challenge that low, and that low, that the latest low is back the week of April the 21st at 28.41, and it's at 20, right now it's at 28.90. So we're going to be watching this closely. Now let's talk about a couple of, and the 5-year you can see is much lower, and the 10-year as well. So I just think that rates are telling us that they aren't going to go, they don't appear to be going up right now. And I wanted to show you, this is the wood, which is the iShares Global Timber and Forestry ETF. It made a new high last week, it went to 60.77. Today, it's gone to 60.70. I'm watching this real closely because this, in fact, becomes leg F. F is where you got to be really careful. It could have recycled. At least for now, I'm calling it F. I don't see why I shouldn't, based on everything I'm looking at. So this is F. I'm making that one brown so that you can get, it doesn't have to show up right now there. So this is what's very important. And the HGX, the Philadelphia Housing Index, is not making a new high so far this week. We've only been not even an hour into to 15 minutes. So we'll watch this one closely. My thinking here is that we're looking at a situation where the four L's, VIXY, Bondi, Dolly, and Goldie, that's gold, bonds, dollar, and the volatility index are going to become more and more important over the coming 2 days or so, going into the 1st of June, that's Thursday, watching it closely. Crude oil, as I said, is pulling back. It's just stuck in a range. It doesn't seem to be going anywhere. So before we go to the next break, I wanted to show you something. Within the context of the New York Stock, I know Larry loves to talk about the New York Stock Exchange because that's the one that, for those of us who've been in the business a long time, we've watched it for decades. It's a really important indicator. It's an index that has over 2,000 stocks, or just about 2,000 stocks, and it has made a peak D in the daily, and it's pulled back to the 9-period exponential moving average. The weekly is just in this chop trading band between 11,687, the all-time high, and the low that was made around 11,300. Is that right? 11,324 back at the week of the 14th of April of this year. That was a leg C. And I'm just looking at this and I'm saying, you know, so far it's held pretty well. It hasn't broken to a new high. It was really close. All it had to do was go 11,687. The high of last week was 11,666. Good grief, 28 points, and it makes an all-time high. So I'm watching this. There's a chance that maybe this week these indexes just need to get to all-time highs. Amazing. But that could happen, and that would mean that the Dow has to get to 21,170. Then it's caught up to the NASDAQ and the S&P, which have made all-time highs, NASDAQ leading. Semiconductor seems to have broken out to a slightly higher high today at 86.02. The other factors that are important here is that the QQQ series hasn't gone negative, hasn't held negative. It's up 25 cents. It made a new nominal high above the 141.33 level at 141.50. So there's still internal strength, and we're going to be watching this really closely. What happens by the end of the day is going to be imperative to watch. Why? Because if there is a break to the upside, the Dow is now down 19. But let's just say the Dow, let me do the Dow right now, INDU. The Dow, in fact, is able to close today at 21,096. Just, I'm giving you an arbitrary number, about 40 points up from here. So it's up 25 points from where we are at this moment. That's just a hop, skip, and a jump, and you get to that leg D, even if it's below the previous high. But that should help other indices, and that should help the New York Stock Exchange. It should help the IWM perhaps have a little bit of a rally here. It's still down 32 cents. It's acting very weak. We're going to be watching today very closely. That allows the VIX index not to plunge, not to break to the upside above the 9-period moving average of 10.73. It's now at 10.41. It's only up 60 cents, having gapped up. Going to be watching this closely. My contention still is we're in a topping phase, and that the upside is extremely limited. This is what I'm thinking. But the downside starts to open up if there is a failure pattern and we start to close towards the low of the day today, going into tomorrow, especially when you've got fund managers getting money in, and they want to put it to work. It's the end of the month buying, and if that can't bolster or booster the markets, that's not a good sign, because then you're running out of ideas, you're running out of everything. So we're going to be watching this very closely. Let's just go back to our 2-minute. That 2-minute broke out. I'm going to call this leg B just for now. Actually, it looks more like an alternate count, but I can't do that. So this is, I have to call it an A and a B. You can go modestly higher. We'll see what happens. Meantime, back at the ranch. A failure would be at 24.1170 right now. A close under 24.10. No, a close under 24.08. This low right here. 24.0850 on any 2-minute bar would be a big negative. A close above 24.14, as I've been saying for a little while, a close over 24.14 says, oh, no. Still residual strength. Don't rule out that residual strength. So with that said, we're going to be looking at, I want you to look at, do we have time? No, we don't. When we get back, I want you to look at a couple of stocks. I want to look at, I know Larry likes to look at Apple and certain stocks within the NASDAQ that are really important. I'll be back. Amazon is up $2.99 at $9.98. It's going to try to touch 1,000, I'm sure. Oh, it did. It hit 1,001 and 20-something cents. I'll be right back. Basil Chapman sitting in for Larry Pesavento.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, during the break, I was asked if I would look at PBR, Petróleo Brasileiro, SAADS is a Brazilian, I'm not sure if they're refiners or anyway, it's a Brazilian oil company of sorts. It's trading at $8.88, down 7 cents. You know, I don't like this right now. I'd be a little nervous buying a foreign oil company. I just don't think it's, I could be completely wrong about this because when it does have a move, it's so quick. But I think this move is fading. It's at 888. Just be careful if it, Oh man! If you are long, I'm just going to say, if it was me and I was long, I'd put a stop on some part of my position at 871. 872 was the low Friday. If it takes that out, I think it's coming all the way back to the 839 low of the 18th. And if it keeps moving up, that's good. You want to see it at 9.07, the 9-period moving average, 9.08 actually above it. So I'm just going to say, the way I'm looking at it, oil is not going anywhere fast right now. I think if anything, it's going to be pulling back. I would just not be doing anything with this. I'd be looking at it. If you are in it, as I say, keep your stop fairly tight. But would I buy it? Would I sell it? I need more evidence about its strength. I can see more weakness coming. I don't see much strength, and this is just a sudden spike up news-related. So PBR at 889, no, I wouldn't be doing anything. So now let's do a couple of things. Just a few minutes, and you get Tom O'Brien's 8-minute wrap-up. And so I'm going to be right here saying, look, these are the levels that I'd be watching. If the VIX index doesn't pull back much more, it's at 1044. Up 63 cents. But it just starts to creep slowly back to the 1074 9-period exponential moving average as this market constantly tries to rally and then fails, and you've just got the select move. Maybe a couple of semiconductors are moving things a little higher. I'm going to say to you, just keep in mind that there's a lot going on here that suggests the upside could be limited, even if there is recovery highs, rotational highs. I think it's going to be tough coming into June. This is the way I'm looking at it. So keep that in mind. Hey, have a great day, and stay tuned. You've got great shows coming up, Tom and Tommy O'Brien, and I'll be back at 11 o'clock for my usual show, The Tiger Technician's Hour. Have a great day. See you later.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.